News Radio 600 Kogo, welcome to your weekend. It's San Diego Business Weekend. I'm Sully. Great to have you along today. We had a really interesting week and a distracting week on Wall Street, to say the very least. And to talk about that today, I've got Kristina Gustin coming in just a second here. Also, Patrick DeHaan from GasBuddy.com, Tom Del Becarro. We have a full show today. San Diego Business Weekend's on the air. And, you know, when I talk about a distracted weekend, you know, sometimes I talk about a pure market. And a pure market is one where we don't have distractions from Hollywood. We don't have distractions from Washington. We don't have distractions from overseas. It's just basically dealing with just earnings and a pure stock market. We rarely get that, but every once in a while we do. But in the face of everything from an impeachment inquiry that we heard this week to Fed Chairman Jerome Powell speaking to Washington, all three major indices struggled to find direction. In spite of some great retail earnings from the likes of Walmart. And of course, the reason the retail earnings are so interesting to me is because the GDP, as I always mention, is the report card of our economy. And our GDP, as are all GDP, as all economies across the country, across the world, 70% of every economy is based on your ability, the citizenry's ability to spend money. And you can't spend money unless you got a job. And if you're spending money on stuff, meaning that people need to produce stuff, manufacture stuff, which is why the PPI, the Producer Price Index, is so important. That's why wholesale inventory numbers are important, because if their wholesale inventory numbers are going down, it means you're buying stuff. The more you buy stuff, the more they need to hire people to make stuff. The more they hire people to make stuff, the more of those people spend money, and you see how the whole circle works. Well, with respect to retail, look no further than the likes of Walmart, who just killed it this week in earnings. Look no further than the likes of places like Home Depot and Lowe's and Nordstrom. I think we've covered Best Buy. You've covered all the spectrums. You've covered the high-end retail, the low-end retail, the everyday retail, and we're spending money still. Now, when you see those sort of metrics, you have to ask yourself the question, why would Fed Chair Jerome Powell cut interest rates then? We got an economy that's singing along here. We have unemployment at a 55-year low. So we have low interest rates. So we've got low interest rates. We've got jobs. We're spending money. Inflation's intact. In fact, the number this week, showed that even though we're spending more money on gasoline, overall inflation numbers are low. The only thing that I can point to, and there is some evidence to say that there's people that are much smarter than me that actually agree with me on this, and that's the fact that there are some headwinds of a recession in Europe. In fact, Germany's economy is really having a tough time right now. And as a result of Germany's economy, which I think is the fifth largest economy in the world, it is slowly sort of caving. And if I'm correct, I think that Jerome Powell is trying to stave off any sort of blowback from a potential European recession, I think, is probably the way you have to think about it. So that's, and 30 years after the fall of the Berlin Wall and 29 years after Germany reunited into a single country, they are Europe's strongest economy. But they, again, are facing some headwinds that risk spilling over into not only the rest of Europe, but the rest of the world. And if Germany is at the brink of a recession, and if you look at the industrial sector, especially in the auto manufacturing space, it looks pretty ominous. The biggest problem is uncertainty, and that is caused by something very interesting here, and that's the Chinese-U.S. trade war. And there is overall weakness in global trade. So why would there be blowback on Germany from the U.S. trade war? Now, we understand why there's blowback potential in the U.S. from a German recession, but Germany's economy is woven into the world economy and the economy of the U.S., just like our economy is woven into the world economy and everyone else's economy. And again, Germany, the fifth largest economy in the world, largest consumer market in the Eurozone, and largest European trading partner with the U.S. So that should answer a lot of questions. Any slowdown is bound to affect us. So that's why I think Jerome Powell is stepping in and saying things like, well, you know what? Let's make sure that we are hitting on all cylinders here. Now, having said that, Jerome Powell is not going to cut interest rates any further. And here to talk about interest rates and overall market wisdom is our good friend Kristina Gustin from UBS Financial and RKG Wealth Management. So I'm so surprised this week, Kristina, with everything going on, that we went so sideways with these impeachment inquiries, as well as Jerome Powell speaking. I thought there'd at least be some volatility, and I can't tell you if it should have been up or down, but I'm really surprised that we went sideways. So first of all, thanks for swinging by. And what are your comments on all this? Are you surprised about the market this week?
Thanks for having me. I was a little surprised. I think what you saw this week was a perfect balance of, like you said, some strong fundamentals in our own economy and good returns from a lot of our large corporate retailers, but also this remaining uncertainty about the trade war. I think that's gonna keep a lid on our enthusiasm in the stock market for a while, and I think that's what's happening globally. I mean, a lot of what you talked about in Germany, this kind of coordinated slowdown, that's what people are afraid is going to happen all over the world. So that uncertainty is kind of keeping a lid on our markets here. I think, we're let's not forget, we're at all-time highs, and those numbers in part have been driven by optimism that the U.S. and China can reach some sort of an agreement, and we keep getting, little teases that they're making progress, and we're almost ready for phase one, and we're going to roll back tariffs, but nothing's really been finalized yet. So I think that's this tension you're seeing in the market that's just kind of keeping us in the same place this week.
The volatility factor, which is interesting, is not going in lockstep with Washington anymore. Do you think we as investors have sort of gotten investor fatigue with all of the garbage that's going on with respect to Wall Street right now? Because with respect to Washington right now, I think there's some investor fatigue where we're like, okay, oh brother. So I think a piece of that needs to be reckoned with as investors, because look, we're not even paying attention now. I mean, there is an impeachment inquiry. You think we would be dipping 3-4% because of potential uncertainty, but I think investors are saying, well, oh, by the way, there's an impeachment inquiry, right? I mean, it doesn't seem like it's a big deal.
I agree with you. It's not moving the market at all. I think the market feels like it has bigger fish to fry with, global manufacturing and trade, supply chains being reconfigured all over the world. I think that there are larger forces at work, which is really interesting because I think, 4, 5, 6 years ago, an impeachment inquiry would have been a really big deal, but it doesn't seem to be a factor now at all.
For UBS, who came out with some interesting things research-wise this week, which I reported on in the morning news, any sectors that we should be paying attention to? I mean, obviously, retail is a big one for the reasons I talked about going into the holiday season. But there's been a couple of interesting reports. One report from UBS talked about the fact that people are retiring later for a number of reasons, and not just financial reasons, for the reasons of they want to keep their brains alive. But that brings an interesting sort of conversation, because if older people are staying in the workplace, that's going to change investment focus for a number of us, correct?
That's interesting. Yeah, so we have a number of long-term themes and more kind of shorter-term focus. I think in the short term, there aren't any big changes this week or this month in terms of different sectors of the economy. I think in general we're just focusing on quality, improving the quality and credit quality of our different holdings, and looking more to yield than we are to growth. So we're focusing on dividends and income right now. But when you're looking at longer-term themes, like people people working and retiring longer, those are definitely a factor. And I think if you look at extended longevity, you could say that healthcare is a focus. All these housing and construction companies that are building retirement and healthcare facilities are certainly a focus. And the transition from combustion engine to electric vehicles is another big one that we're looking at.
Yeah, it's interesting with the healthcare focus. If older Americans are working longer, then that means the healthcare system and the money going into insurance benefits is going to be continuing. So that might be something to look at. With respect to the 2020 election, I have to ask because I believe that we're going to see some volatility. And you have been a calming voice to a lot of us just who listen to you every week about, you sort of ignore the swings and go take a long-term approach. It's going to be tough to ignore some swings coming up here because it's going to get ugly, I predict, especially politically. And I got to believe there's going to be some blowback to the market. How do you guys keep a straight head going into what is going to be a divisive time in our country? And with respect to what's going on in people's portfolios?
Good question. So the House View Weekly this week is titled "Investing in 2020." What is our outlook for the coming year? And certainly one of the biggest uncertainties is the election. So I think that when you're thinking about an election and the different candidates that people will be talking about, all their different policies would have different effects on sectors of our economy, like healthcare, for example. If, for example, there were a change to universal healthcare, that would radically change that industry. I think that what we learned in the last election is have a quality portfolio and an asset allocation that's not based on a 4-year cycle. It's based on a 10, 20-year.
Hey, Kristina, stay right there. I'm going to keep her back because she's too smart. San Diego Business Weekend, News Radio 600 Cocoa. News Radio 600 Kogo. Welcome to your weekend, San Diego Business Weekend. Very excited to have Coe Lewis from KGB joining us in just a second here with her foundation that we have spoken of here on the program. And an interesting week on Wall Street because we went sideways in spite of the noise out of Washington and the news out of Fed Chairman Jerome Powell. So to talk about that continued is one of the smartest people I know and a person that I trust personally in the financial business, and that is Kristina Gustin, VP, RKG Wealth Management, UBS Financial Services. And before we let you out of there, Kristina, I want to talk about you. We don't get too businessy on portfolio stuff here on the program because I want to give people useful information, and there's plenty of retirement shows. But when you talk about going into the 2020 election, let's face it, there's going to be distraction. There's going to be fear. You hear me say all the time, the market works on two emotions, and that's fear and greed. With respect to that, you're just saying put your head down, stay the course, have a balanced portfolio, and try not to listen. How is that the advice you're going to give your clientele?
For the most part, I think, as we get closer and we see who the leading candidates are, it'll be a little easier to evaluate those risks that are specific to certain sectors like healthcare we mentioned earlier. I think right now it's a little too early to do that. We're focusing on year-end planning with our people right now, making sure that we're rebalancing our asset allocations. We're having a close look at, capital gains and losses and potential tax liabilities for people for 2019, and we're kind of doing this year-end housekeeping right now, and I think it's a little premature to reconfigure a portfolio in advance of an election. Certainly, I agree with you. There absolutely will be volatility, but we've been talking about risk management, all along the way for the last number of years.
Yeah, at the end of the day, you have to admit we're probably and hopefully won't see a time like we're seeing right now. I mean, the economy's singing along. At the same time, there are two camps. And those two camps are distracting what could otherwise be a fun time to invest. So, Kristina, thank you so much. Kristina Gustin, UBS Financial Services, RKG Wealth Management, who is with us every week here on San Diego Business Weekend. And literally a person I trust. She's not a sponsor of the program. She's just the only person I ever want to talk to on the air about money and stocks because she has no agenda. She's just going to give it to you straight. Speaking of somebody giving it to you straight, I will tell you, 23 years ago, when I got in radio, there was a person who I was assigned to that I was supposed to learn everything about radio from. And I was on the radio for exactly 3 months, and they sat me in front of this legend at the time named Coe Lewis, who continues to be a legend, who you're going to end up in the Radio Hall of Fame if you're not already.
I wish.
No, you will. There's no question. But I remember very specifically them marching me down from Kogo Studios into our new building and saying, Sully, this is Coe. And I was nervous because I'd listened to you on the radio. And she's going to teach you how to run the board.
Yeah.
And look at me now.
Yeah.
I've all grown up.
You're running the board. You're running multiple boards.
Oh, yeah.
Sully.
Well, because it's, but it's funny. Do you remember?
I absolutely remember. And I have to tell you, fast forward, I'm incredibly proud of where your career has gone. I mean, it's taken so many avenues. And, you meet a lot of people along the way in radio.
Sure.
Some stay in, some leave,
Sure.
Some get wise, like, what am I doing in radio?
Yeah.
But you know what? You are just firing on all cylinders in so many arenas, and I'm just really incredibly proud of you.
Well, that means a lot coming from you, first of all. Number two, I didn't get into radio as a radio personality.
Yeah.
I got into radio as a business guy who happened to, Cliff Albert over here at Kogo listened to me doing an interview. I was interviewed one time. He says, "Hey, ever thought about doing radio?" And literally 6 months later, he took a shot at me, and 23 some years later, here I am still. But let's talk about you. Coe Lewis, of course, 1015 KGB. You have been a mainstay in the San Diego airways forever, but people know a few things about you. They know about your personality on air. They know about your passion for music. And I think most people know your passion for animals.
Yeah.
But I don't think many of them know how far that reaches. It reaches far beyond San Diego County.
Yeah, it is. People have known I've loved and supported and worked with animals my whole life, but it is I have taken another step. I am a co-founder of a foundation in Zambia, and it's called Nsefu Wildlife Conservation Foundation. And people are like, why do you have a foundation across the globe? Like, couldn't you pick something locally? Well, I was raised in Ethiopia, actually, on a
Were
game
you really?
reserve. Yeah.
You were raised in Ethiopia on a game reserve?
Yeah, half the week I would be with my parents at my dad's safari camp, which, looking back, he was way ahead of his time because nobody had safari lodges back then. So we were in a place called Awash, and it's where Dr. Leakey found Lucy, the bones, the oldest bones at the time.
Sure.
So half the week I was on this game reserve, and half the week I'd be in Addis Ababa at school, a very small school. So it's in my DNA. The animals of Africa are in my DNA. And when I lived as a kid in Africa, there were millions of elephants.
Yeah.
And we have 300,000 now.
Really? So when you walked outside as a kid, this was oh, by the way, just like we see seagulls here in San Diego.
Exactly. I mean, I would go out on the game drives every night with my dad's guests. I would sit on top of the Land Rover, and the animals would be everywhere. I mean, everywhere, millions upon millions. And so here I am in San Diego watching the destruction of Africa and the decimation of these animals. And I literally just couldn't sit idly by. And God works in mysterious ways, and I get a call from a listener, and he says, you really should talk to my wife. We have a safari camp in Zambia, and we want to do something about poaching. And it's funny, I always knew I was going to work in conservation in Africa. I just didn't know where I was going to hang my hat.
Now, is the poaching part of it, is that why we've gone from millions
it's all
to
poaching.
300? Really?
It's all poaching.
And this is for ivory, I'm
This
assuming.
is all driven by black market greed from Asia. Ivory is a status in China.
Because it's not needed for anything.
No.
It's not even. It's not needed to make piano keys.
No.
It's not needed to make rickshaw. It's not needed to anything.
It's a status symbol.
No kidding.
And when it comes to the rhino horn, it's believed in these traditional hocus pocus, potions and all this stuff. But rhino horn is exactly what your fingernails are made of. So they are decimating these animals for parts of the animal, the horn and the ivory. And we have about 25 to 30,000 rhinos left in the world, and like about 300,000. And these animals are literally statistically gone from the wild in less than 8 years. At 100 elephants a day, 6 rhinos a day,
wow.
we are losing. So I decided, we talked about this. It was Christmas of 2014. I said, we have to do something. We started it. We're about 4.5 years old now. And in the region that we're working, the Nasefu sector in the Eastern Province, we've dropped poaching almost 70%.
Wow.
Yeah.
So by the way, the website, NSEFU.org, Nasefu.org. I'll put it up at the Kogo.com keyword Sully website, and it's easy to find it if you go to the KGB website as well, because I'm certain that Coe has it up there. But NSEFU.org is the website. How can people get involved, and what do you guys do exactly? I mean, what is the arc of that story?
This is where we're very different from everybody else. When we started this, we said we're not going to have 8 board meetings to pick the color of a truck. We don't have time. So we are tackling poaching from all angles. We have a 10-person ranger team.
And boots on the ground. Okay.
Boots on the ground. And we're bringing in economic opportunities and educating. We come in as a friend to the community. We don't come in like saying, stop poaching. It's their country. It's not polite to do that. But say, hey, this is what we're seeing. And if you lose your wildlife, it's going to be economically catastrophic. You know what I mean?
Yeah, sure.
So we want to help you. This is how we're going to help you. So we came in with an idea to enforce with our ranger team, bringing about economic opportunity.
By substituting.
Exactly.
Because look, if you look at the opium trade, there wasn't much incentive for the countries that were growing poppies to stop growing poppies if people were paying big checks for poppies.
Yeah.
So what happened was apple growers would come in and coffee growers would come in. Basically, you're doing the same thing with beekeeping and sowing, and you're creating you're creating economic substitution in these
Absolutely.
places. So look, you don't have to take money for ivory. You're going to make more money doing this.
That's right. And they have a new job skill. They have a future, and they don't have the potential of being arrested or killed because poaching is very dangerous. You know what I mean? On both sides. I mean, I think 400 rangers were killed in the line of duty last year. It is an all-out war, especially in the rhino world. It is all-out war.
Are there some locations more popular than others for where you find snares and so on and so forth? I mean, because gold mining is almost impossible. You have to get lucky. It's the same thing. These are wild animals that are roaming. Is it the same sort of thing?
Because the numbers have been decimated,
Sure.
It's very hard to find, like big herds of elephants anymore, or big tuskers, because they've all been pretty much killed.
Sure.
So what happens is snaring is another thing we tackle. It's the most indiscriminate and heinous way to kill an animal, because people just put these snares out willy-nilly, forget the animals are there, and these animals just linger and die. They're taken out by predators. They gnaw their legs off. It's just the worst of the worst. So we actually are tackling poaching from all areas,
Sure.
including snare sweeping. And we teach people why they need to do a different way to earn an income and protect their wildlife.
Well, okay,
and
so
it's working.
So 2 things here. First of all, we're going to put your donate button on Kogo.com keyword Sully. I'm also going to put it on Big Biz Show, on our national TV show that Rusty Nails, I know who you're a fan of.
Oh, yeah.
And I do every day in 110 million TV homes. But how can people get involved? Is it easy?
Thank you. Yep, thank you for asking. Yes, it's easy to donate. It's right on the website, and I'd like to share that we haven't gotten any grant money or any big donation. We've done this on less than $100,000 a year.
Wow.
And we are blowing the numbers of all the big organizations right off the charts because of the way we're doing it. Anybody who wants to come help, man, 100% of your dollars are going right into action.
Coaster, you're coming back on the air with us at some point. I want to visit this thing every month at least to get it going. And I will tell you right now, I want to donate the band to a fundraiser next year. Why don't we do an Nasefu fundraiser?
Oh my gosh.
And let's get people out there.
That would be the best.
Between the Kogo listeners and the KGB listeners and everybody else, we can get it going.
Oh, thank you,
Coe, thank you
Sully.
so much. Coe Lewis, 101.5 KGB. You catch her every afternoon. And of course, you can catch me every morning at Kogo Morning News with Ted and LaDonna. News Radio 600 Kogo, San Diego Business Weekend. Coming up, Patrick DeHaan of GasBuddy.com. Stand by. Hey, it's News Radio 600 Kogo. Welcome to your weekend. San Diego Business Weekend's on the air. Thanks again to Coe Lewis for swinging by from 101 KGB. By the way, you catch me every morning on the San Diego Morning News with Ted and LaDonna. Right here on News Radio 600 Kogo. Also on KUSI. Good morning, San Diego. And then the ever-popular Big Biz Show with Rusty Nails and I. Weeknights in 110 million broadcast homes nationwide. And we're also on iHeartRadio. and American Forces Radio Network. BigBizShow.com is that website, but our website, Kogo.com, keyword Sully. And lots of stuff going on in the market this week. And one of the things I discussed was the fact that even though gas price, I did a tease this week that I think Ted and LaDonna liked quite a bit. And I said, is it inflation or just a little bit of gas? And the reason I was talking in those terms is because, look, those inflation numbers were looked like they were going up because our gas prices were going up. But in reality, inflation's going down. We just had a little hiccup in the gas stuff. So here to talk about that, my good friend Patrick DeHaan, who's chief analyst over at GasBuddy.com. And I will tell you, I could talk to this guy for hours, but again, we have him for a few minutes today. Patrick, so there was a report that came out this week in reality that said that, gas prices are up, but inflation is down. But, I'm still scratching my head as to why we're still seeing gas prices sort of linger, because I thought we'd be going into the holiday season with a little bit of a break. What's happening there? Because I'm looking at our average gas for the state of California is $3.51, and for the rest of the country, it's anywhere between $2.40 and $2.60. What's going on?
Well, first of all, that was a great comparison there. The market has a little bit of gas.
Yes, it does.
What's been going on finally is prices have continued to recede on the hard-hit West Coast. Of course, California's been suffering with prices averaging over $4 for the last, I think, month and a half now. But prices are slowly ticking lower. Nationally, we're down a couple cents in the last week. California just went back under $4 a gallon. So certainly some good news there.
I want to bring this up. Even though gas prices surged, I think it was 3.5 or 3.7% in October, we're still paying less to fill up now than we did a year ago, right? I mean, the cost of gas has fallen, like 7% in the last year. I just thought we would be this time of year be cheaper. So I'm being a little bit of a dark cloud guy here, but it's not as bad as it sounds, is it?
Well, it's certainly across most of the country. National average still about a nickel under where it was a year ago. But yeah, you look at most of this year has been consistently under last year, with the exception, of course, being the West Coast here in the last month or so. But even here, we're starting to see some relief in those hard-hit states. So yeah, it really has not been a terrible year at the pump.
And I'm always picking on gas, but Americans paid higher prices not only on gasoline, but medical treatment and recreation in October. But inflation more broadly remains low and fairly stable. And a piece of that is because of what the Fed's doing with interest rates. So again, what happened was gas prices surged about 3.7% in October. But again, I want to point out that cost of gas has fallen more than 7% in the last year. While medical care goes up 1%, the cost of recreation goes up 1%, the cost of dining out goes up almost 4%. So adjusting for inflation, actually, we don't have a lot to complain about. Last time we had you on the air, we started talking about prices in the JP1A range, and what that is for the rest of the world means that's the fuel that airlines purchase, and they usually purchase it 6 months advance on a contract. In your opinion, Patrick, when you see gas prices go up or down, do we ever see a correlation? In other words, if gas prices give us a break a little bit, do we ever see airline tickets go down? I don't ever see that. Is it the same sort of market for commercial airlines as it is for us driving down the roads and pulling into a Chevron every day?
Well, it's a lot less volatile. And you mentioned their airlines generally, some of them hedge months in advance, even years in advance. Southwest, that's how they really became so successful 5-10 years ago, is they hedged years out and were paying a low price for fuel when the market went up. But you generally don't see airlines passing it along as quickly as you see the Chevron adjusting their price. Airlines, it may take several months, it may take several attempts for airlines to lift fares up. And like we talked about last time, I think the limited in capacity right now as a result of the Boeing fiasco is probably doing a lot more to support ticket prices than the price of fuel rising. But I think in the months ahead, you certainly could see a little bit more of a pinch that the airlines feel that's not necessarily passed along when it comes to the price of jet fuel.
The interesting thing about California is we have the summer blend. Go talk to us about the winter blend. Can we see even further drops in prices here in San Diego and Southern California, in your opinion, or are we kind of stuck with where we're at right now?
No, I think you have plenty of relief coming so long as refineries can keep their acts together. Keep in mind in the last few weeks, of course, as a result of some of the power outages the state has seen that have been forced on some of these facilities, that there have continued to be challenges at the refining level. So as long as the lights remain on, I think gas prices will continue to slide, perhaps another 25 to 50 cents a gallon in California by the end of the year. So there's a lot of downside in California, mainly because the significant upside that we saw in the last month.
Patrick DeHaan is head of petroleum analysis for GasBuddy.com. GasBuddy.com has a really great gas price temperature map available online. But even more importantly, if you just go online, sign up for free, you can actually type in your zip code here in San Diego. It'll tell you the cheapest gas in San Diego. And I will tell you consistently, there's usually a Costco there, and a lot of the stuff that's further south of the 8 freeway is there. One last question for you today, and I don't think we've ever brought this up. You know, we're going into a very volatile year politically, and it's going to affect the stock market. It's going to affect the way people spend money. Gas is a commodity. Oil is a commodity. Do you ever concern yourself when you're doing analysis and when you're doing projections and when you're doing a pro forma on what it's going to look like as far as prices go? Do you ever concern yourself of the political rancor going on? Does that ever affect your world in the commodity world of gas? Because it certainly affects gold. Gold's a commodity. I've always wondered if it affected oil and gas. Is there any correlation with what goes on in an election year versus what goes on with the price of oil?
Not so much in an election year, but it depends again on who the people put in office. I think politicians, especially this time around, there's a lot of different opinions on the oil industry that are playing into, the way voters may decide. But for now, having said that, there's not really a play, and we, in the run up to the election, gas prices don't necessarily move in a certain way. But like I said, though, it seems like in this election year, there's a lot of very hardline opinions on the oil industry. And we were looking at doing an analysis on the way gas prices may look under any one of these candidates. Of course, that's very charged political territory that we're not used to getting into, but some of these candidates have very strong lines that certainly could have more of an impact on gas prices than others.
The piece of this thing that's interesting is that you wouldn't think that a commodity could be affected by two sides, two children in a playground fighting, which is really what it comes down to politically these days. But indeed, it's policymakers that actually shape what happens with these big oil companies. Isn't that correct? Mm-hmm. And we can all be affected at the end of the day, correct?
Yeah, absolutely. It's the policymakers that can limit access to some of these commodities, especially when these commodities come from the U.S., which is the world's largest oil producer now. So there certainly are very far-reaching effects nowadays compared to, say, 20 years ago when the U.S. wasn't producing this much oil. So now more than ever, these issues, or I should say specifically in regards to oil, will be much more front and center in whatever politician makes it into the White House.
Patrick DeHaan is head of petroleum analysis for GasBuddy.com. Before you're out of here today, I'm gonna put you on the spot. I don't know if you know this or not, but I'm going to ask you, what's the lowest gas price in the country right now?
Well, still, I don't have it off the tip of my tongue here, but I know just within the last few days, we're still looking at sub $2 gas prices throughout areas of Dallas and Houston, $1.89, and also in New Orleans, $1.87 a few days ago. So I just got back from some time off, but still a lot of those sub $2 prices you see there on that map in Louisiana and Texas.
And then I'm assuming California is the highest price gas in the country. So I'm going to say San Diego, LA, something like that. It has to be, right?
Oh yeah, without a doubt. There's still that one station that makes waves on social media that had been charging $5.49 a gallon, but then you go out to the desert and there's certainly some of those prices as well. So we tend to duck and run when we see such a high price.
Yeah, well, the other piece of this thing is, keep in mind, we're paying 80 cents a gallon more because of taxes. Plus, there's that mystery surcharge that we're still trying to figure out, which I put Patrick on to figure out. Patrick, thank you so much. Patrick DeHaan, head of petroleum analysis for GasBuddy.com. Again, the smartest guy in the world. This week, I talked on Good Morning San Diego, as well as the San Diego Morning News here on Kogo, about the fact that streaming services are taking a big bite out of our budgets. So Disney Plus went live on Tuesday, offering approximately 7,500 TV episodes and 500 movies. And Disney is charging about $7 a month, which doesn't sound like a lot, especially when you consider you're getting goodies like Lady and the Tramp and Star Wars and The Last Jedi and so on and so forth. But how about also paying for Netflix, which announced recently that it's going to offer up to 180 Seinfeld episodes, and Amazon Prime and Hulu are two other services to consider, and don't forget HBO Now and Apple Plus. So we've got no shortage of choices, but we certainly have a shortage of time and energy and, of course, money. I went on MarketWatch.com, and I put this link on our Kogo.com keyword Sully website that actually has a calculator where you can go in and you can find out what your lifetime cost is if you have Netflix for $12.99, Disney Plus for $70 a year, Hulu with no ads for $12 a month, HBO for $14.99. If you figure out what all this is costing, I put all the ones that I'm subscribing to in there. And my lifetime cost, based upon what they think my life expectancy is $63,000. I will pay for these services in my lifetime. And I think it's really interesting that if I just cut out a couple, that 63 goes down to 41,000. You should go check it out at Kogo.com, keyword Sully. The link is right there. Just click on the link, and the calculator is front and center. I think you should take a look at it because it's a very real number. It's almost like the latte factor we talked about a couple of years ago. So take a look at that. Coming up, Tom Del Becarro, the author of The Divided Era, talking about the intersection of business and politics right here, San Diego Business Weekend, News Radio 600 Kogo. News Radio 600 Kogo, San Diego Business Weekend is on the air, and I hope you're having a great weekend. I'm Sully. I don't know if any of you are going to go down to Petco Park and check out Pedal the Cause, but my band will be playing there today. Come over and say hi. We'd love to say hi to you. Thanks again for Coe Lewis from KGB 101.5. Lots of radio stations here in the building. And her website, nsefu.org, nsefu.org, Wildlife Conservation Fund. Such a great gal and such a great heart for the animals, so check that out. And of course, thanks again to Patrick DeHaan from GasBuddy.com, as well as Kristina Gustin from UBS Financial. Of course, catch me every morning on Good Morning San Diego. A little program note here. I'm going to be gone next week because, as you know, I am the voice of Sharp Health Plan. And I'm going to be at Sharp Hospital next week. I'm getting a full knee replacement Monday, and I'm under the great care of the people and folks and doctors over there at Sharp Healthcare. And Dr. Richard Santori is going to be doing my knee surgery. But a shout out to Richard and Henry over there at that office. It'll be my second knee surgery. I'll be back in business, and hopefully, I told me producer Lady Mary, if I'm off of painkillers by Thursday, I'll be back in Thursday. But chances are you're not going to hear me next week, but you will hear either a guest host or my shiny voice here on San Diego Business Weekend next weekend before we go into Thanksgiving. One of my good friends and pundit and analyst and historian and attorney and speaker and TV host and author, Tom Del Becarro. TomDel.com is his website, or you can go to politicalvanguard.com. Was in studio last week, but he's here with us via Skype today, straight out of court. Tom, we were talking to Kristina Gustin earlier today, and right in the middle of a week where we had an impeachment inquiry, whatever the heck that is, as well as Jerome Powell talking, the market generally ignoring this stuff, and I maintain that there is some investor fatigue with what's going on in Washington, where you would expect a drop in the market in years past when you heard the word impeachment, and they're going to shake this administration and turn it upside down, and that's going to cause uncertainty. We got crickets this week. Talk about why you think Wall Street isn't being affected as much as it used to be by news coming out of Washington. I mean, we're certainly affected by the U.S.-China trade deal, but we're not being affected by this impeachment inquiry thing. What's going on? Is that because we're not buying it?
I agree with your point, and let's talk about a couple of the reasons. One, the Democrats misplayed this week. And the reason why they misplayed it is they leaked out the juicy information, or at least the stuff they thought was juicy, over the last 2 to 3 weeks. So the hearings this week for them were really just a replay of what was already known. So they stole their own thunder, and they unburied the lead by giving it away. So the hearings this week were generally not that shocking. And so there wasn't a big bump to be done in the market. That's number one. Number two, I think the market's discounted the possibility this is going to have any real effect, meaning you call it fatigue. I call it, well, we don't really think something's going to come of this.
So disbelief, right?
Yeah. So it's whether it's the fatigue you describe or my notion that they don't really believe that policy is going to change within the next year. And what I mean by that is Trump's not going to be removed. The business cycle is going to not be interrupted by politicians for at least another year or so. Therefore, there's no reason not to trade on the basic underlying factors which make our market, the U.S. market, the best market in the world right now.
So when you think about that, and of course your tenants that actually, and I've adopted saying that an election year, markets tend to go sideways. And I went back, literally 10 years. That's exactly right. Markets go sideways during election years, and not just presidential election years, because we had one of the biggest maybe the biggest midterm election that we've ever seen in our lifetimes last year. We went literally sideways again. We're going up this year, and for a little while it looked like we were going sideways. But I have to believe that next year being so volatile, I'm worried not only just going sideways. I'm worried about going sideways to down. Does it get worse from here, in your opinion, in the fear and greed factor for investors? Because there's going to be a lot of noise every day. There's going to be more noise from this day forward. Don't you believe that?
Well, I don't think there's going to be significant noise between now and the end of the year. However, although the IG report is going to come out, and that's going to undercut the Democrats' argument.
And the IG report, just for our listeners who are not following that, is
the Inspector General's report on the actions related to the FISA abuses that occurred in spying on the Trump campaign officials. Those reports will be coming out, and I think that undercuts the Democrats' impeachment drive and also places the Democrats on the defensive. This isn't a political show, but the reason why I bring this up is because if our working thesis is correct that there's fatigue or they don't think the market is, or the market's already discounted the possibility that Trump's going to be removed, that reinforces that existing dynamic. Going into next year, you're going to get the Durham report or indictments, and that further tamps down the Democrats. And then my prediction is that the Democrats are headed to at least at this stage, a brokered convention. They won't have anybody going there with over 50%. And so I think if I was a betting man, and I'm invested in the market, significantly, I would say that yes, there's uncertainty next year, but I don't think that it's going to look so bad for Trump that the market should be discounted or significantly dropping. On the other hand, I do think it will go sideways.
So when you think in terms of the fear and greed indicators that we have seen in the market with respect to interest rates, with respect to debt ceilings, with respect to in the impeachment inquiry, which I thought would happen, but when you think just in terms of the rancor index, I mean, which is sky high. Do you think that's going to? I mean, because there was a report that I talked about it this week on the morning news, talking about the fact that wealthy Americans, more than anyone, are putting their money into cash, while professional investors are keeping on investing. Do you think that's the Elizabeth Warren, rhetoric is starting to get to those wealthy investors? Because, boy, if you think about it, professional investors are keeping their money in, but the rich are hoarding cash. I mean, this is the latest, UBS Global Wealth Survey saying that, the people that have the 1% are saying, well, we better, put our acorns away, but professional investors are going deep into the market. Is this a result of some of the messaging you think they're hearing?
Well, that's a really important and interesting backup to what you and I say along, which is that politics is bad for business.
Yeah.
So this uncertainty is causing people to invest differently than they otherwise would have and keeping money in cash. Full disclosure, I have a significant amount in cash as well, but I think which will change after the election. If Trump wins, then a lot of money is going to come back into the market, won't it? And after the election next year, if Trump wins, you can expect the market to do really well, I think, for at least 6 to 7 months after his reelection. So the answer to your question is yes. And if money's coming out of the market to a significant degree, right, is driven on pure supply and demand, right? If more people are buying stocks than are selling, stocks tend to go up. Then what you're telling me is politics is reducing demand, which is the whole theory behind a sideways market, because without people being bullish, if they're worried like you're describing, then that's why the market goes sideways.
Well, and the one thing I'm just saying is because, and maybe it's because I'm in media and I hear it every day, but I believe that more people are paying attention. I mean, I can tell you this, when I was in my 20s, during the Reagan years, I wasn't following politics. But of course you were, because you're a historian. But my daughters, who are in their 20s, are absolutely following politics. So we're in a time now where a bigger piece of the population, for whatever reason, is paying attention to politics, and that has to affect emotion. And this market, look at a section of our stock market is affected by emotion. I understand that only 50% of Americans roughly are invested. Many of those investors are going on fundamentals and technical analysis and news, but there's also those other ones that are, that sell at the bottom because they jump out and so on and so forth. Don't you believe that the emotions of the market could affect things? Detract from the market, because it's going to be ugly next year. Don't you agree? I mean, it's going to get.
So to answer your question about your daughters paying more attention to you, the fact is, since Reagan was elected, the federal government is more than 3 times the size. It's more ubiquitous in our life. You can't get away from it. So it's making more and more decisions, picking winners and losers every day. So yes, more people, and this is, as the size of government grows, so does people's agitation and rooting for it tend to grow. So that doesn't surprise me. Then the question you say is, are emotions involved with that? To a certain degree, yeah, I agree. The market's going to be affected by, if there's a bigger wrecking ball out there, which is what I think larger government is. Yeah. I've said to you many times, I think you agree, if government didn't do anything for a year, business would be happy because they would know a single set of rules, right?
Yeah, you're absolutely right.
So I agree with you that there is that more emotion, and next year is going to be a bitterly divisive election. And if there was and maybe this is something you and I should do, is create a index for craziness stocks.
Yes, but I'm just going to tell you what, you keep your weekends free because I'm going to need you. Tom Del Becarro, politicalvanguard.com, tomdel.com, his book, The Divided Era, which is what we're talking about right here. Thanks so much, Tom. We'll see you very shortly. All right, Kristina Gustin, our director, Curtis Manager, our assistant director, me and producer Lady Mary, our producer, and I'm Sully. It's San Diego Business Weekend, News Radio, 600 KOGO.